All right, hey guys, Sam here. Oh, we're early afternoon on a Saturday, and I've got three majors lined up here that I'd like to get to in this video here. I'm trying to look at Dash, Monero, and Ripple, all of which are creating some new opportunities here, and I think there's some good lessons to be learned if we look at this historically. So, you know, one of the things that I hope you're trying, that you're gathering, that I'm trying to do here in these videos, is to teach you how to do this for yourself, right? So I have not discovered or invented anything here, right? This was all taught to me, and so I'm trying to pay it forward and teach it to you guys, so that you can benefit from this, because trading is certainly one of the most difficult ways to earn a living, or to see returns on your investment capital. But I want to show you that it is doable, it's achievable, but you've got to understand the way the markets move. And as we sit here in 2017, looking at the cryptocurrency market, you have to understand who's behind the market, and you got to understand that it is now a machine-driven and algorithmically driven market. It's not a couple of guys with even a few $1 million moving the market around. This is big money and algorithms that are programmed to respond in ways that are aren't as complicated as you might think they would be. Right? It's relatively straightforward once you understand it. And you can strip down to the absolute basics of just looking at fib relationships. I propose to you that adding the Elliott wave structure helps you organize and quantify what you're seeing in even more detail. So I've got before us here Dash. Now, Dash has been one of the most technically precise markets in the entire cryptosphere. It's absolutely remarkable. And I'm going to show that to you and prove the case. And perhaps going forward, we'll find some opportunity based on what's happened historically. Now, I think there's massive upside potential in Dash, let alone the fundamental story, which is also very strong. But technically, this is trading with just remarkable precision. So let me make that case for you, and I think as we get to the right edge of the market, we can see some opportunities that will take advantage of what's happened historically. So here we go. This is the 8-hour here. Now, take note here. I've got the major wave sequence here. I have as a 1, 2, 3, 4, and going up for 5s. And I've got targets up here as high as, some of them go up. Here's 800 as an extreme target. And you'll note from prior videos, I like to do these and draw these little videos as potential targets, and I'll keep them on my chart. And if and when we approach those, I know that they're relevant to prior swing relationships, and I want to pay attention to those, and likely we'll recreate them as we go here. But let me make the case here. So, if we're going to trade a market, we want to evaluate if it's trading technically. So how do we do that? Well, we look back at prior swings and look at those relationships and see what we can find. So part of what I'm doing here is trying to teach you this so you'll recognize it, but also, as we go to the right edge of the market, look at how we might predict what's to come. So if you're going to analyze a market and you're going to look at taking this kind of approach, you want to see how the market has responded historically. So I'm going to go back here to our first wave that we have. Excuse me, guys. Sorry. And take a look and see what we can find. So keeping it very basic here, so you can see we do get this nice 5-wave structure here. Now let's take a look at the swings and see how they've traded technically. So I've had to mark here the absolute low so I could see it. So here's my first swing low to my currently labeled swing 1 high. Now we know from looking at the statistical evidence that wave 2s 15% of the time will go beyond the 62, and they'll go down to the 786. They can go a little bit deeper, but this is not uncommon in a second wave, as there's a battle for trend. Now here, because we're so low, we're close to zero, not likely to go to zero unless Dash was going to go out of business. So we do go deep. At 15% of the time, we'll go down to the 786. So let's go back here and take a look. So we go. I'm going to take it here and try and recreate this. Right? I know it's easy to say, well, the benefit of hindsight makes this easy, but that's really not the point. The point is to show you how technically this market is trading. So if we look here, we go here's currently labeled wave 1. We go down into a 3-wave structure. We go exactly to the 786. We know fib targets. We've got the negative 23.6. That's the first target. Then we get the negative 618. Then we get the negative 100, the negative 1618. Well, so you can see here, as you would expect in a true impulsive structure, we go from the negative 786 of this swing here. We stay internal, go to the 786, and we rip all the way to the negative 618 to the tick. Now, of course, we can see that with hindsight, but let's then take note here. Then we go to the negative 100, and now we're to and through over here. So we have to look at the other relationships as we get up higher. But I'm getting ahead of myself. Let's take that off. So we go, at this point, if you're trading here, you don't know what's to come. We're just drawing. We've got a wave 2 low here, and we've got a wave 3 high. So we go to the wave 3 high. What's our expectation? Well, we know that the majority of wave 4s, right? And I'm going to post this again. I've posted this many times on my videos, but I'll log it again. That statistically, the majority of wave 4s go between 30 and 50% of the wave 2 to 3, and another 15% they'll go between the 50 and the 618, or as we will often see, between the 618 and the 65. Right? So collectively, we have 75% of wave 4s in this range. So let's go back to Dash. Here's our wave 4. Here's the 50. Here's the 618. We go right between it. Coincidentally, take note, we go right in the pocket of the Vegas wave. And then we rip higher to the negative 23 to the tick. Okay, again, so what that shows you is that we've got algos that are active in this. This is the first target for algos at negative 23.6 from this retracement here. First target. Now we retrace and we get this additional rip higher here. And I don't remember what was happening that day, but this is an unusual wick to see this. This is we're going from 240 to 210. That's a $30 wick. So there was something unusual that was happening here that caused this kick up one more time. But take note, because this is a 5th wave, what we're looking for is the subdivision into 5 waves, right? To stay with the trend. We correct in 3s, we trend in 5s. So you can see we get the 1, 2, here's the 3, which wicks the negative 23, retrace 4th, then we go back up for one more 5. So let's, again, for the lesson that's involved here, let's look at that relationship. So all I'm going to do is go from this swing, what would have been the 1, the 4 low goes to the 1. We go down for the 2. We stay between the 50 and the 618, the most common target for a wave 2. Then we go up, down. Where do we go? To the tick. We go to the negative 100%, which completes that 5-wave structure. So we can now confidently look at this and say 1, 2, 3, 4, 5. We complete that. That's the dominant 1 wave. So remember the theory, it's a fractal trading relationship that waves subdivide within waves, waves within waves. So we can say now we've completed some sort of an impulse. Well, in this case, it was a diagonal because we overlapped the 1. So for you Elioticians, so we get a completed leading diagonal to finish off this 5-wave sequence and complete the first wave. Okay, so again, I'm going to take these off as we go to try and keep this from getting too cluttered. Well, since we've completed a 5-wave sequence, we now want to look at the retracement relationship from the absolute low to our absolute high. Now, take note. Where do we go? Well, yes, we wick through the 6.5. This is, that's an extreme. That's a, I don't know what was going on that day. This does happen, right? This is, of course, that's stop running, right? But you can see the wick goes through. The body stays within the 618 and the 6.5. right? So somebody got screwed there and stopped. But what gives you confidence that we've got a good low there is look at the extreme, how quickly that responds. So breakout traders that were trying to short it there are immediately stopped out, and those buy stops are what start to fuel this. In addition to the people that knew that this 5-wave structure was retracing, we know that a wave two can be deeper than the 618, right? So we can go 15% of the time. We're going to go between the 6.2 and the 7.86. Exactly what happens here. So here's the 618. Here's the 7.86. So this wave 2 is perfectly valid. It stays within that context, and then so as a wave 2, this should be no surprise. So what are we looking for if that's our wave 2? Well, we're looking for the start of an impulsive structure. So let's start to look up here. So where does that wave 2? Just this is why you always want to refer back to these. Where does that go? Right to the negative 100%. I mean, within a tick or two. Okay, so yeah, that's the dominant structure, but within that we have a 5-wave sequence as well. So again, I'm just pulling these off so that it doesn't complicate the chart. So again, back to a retracement tool. I'm just going from wave low here to what we now have labeled as a wave 1 high. Where do we go? 50% to the tick. Now we're to there's the 23. We hover there, and then we rip beyond it. I mean, we've gone beyond the 618 on this. So we want when that's the case, when you've blown through this and this, now we want to go to our alternate price projection, because our assumption is, since we've got a 1 and a 2 exactly at the 50, and take note, right in the pocket on the Vegas wave, right between the 144 and the 169 EMA, you'll see it over and over again. That's a great reference for an entry, and coincidentally, or not, exactly at the 50%. That's an absolutely textbook perfect entry, and exactly what you were expecting, because we had the 1-2. We're now expecting the 1-2 of the impulse wave. So now we look at that and we go, okay, well, let's look at the relationship between the 1 wave and the 3rd wave. Okay, again, back to our reference here. We know that 3rd waves, the majority of the time, 45% of the time, will go between the 1618 and the 175. Another 30% of the time, they'll go between the 175 and the 262. So collectively, 75% of the time, waves 3 will be between the 1618 and the 262. So we want to note those and pay attention to them. So here, I'm just going to draw it here so you can see it. Here's the 1618 to the 175. Right, do you see it over here? That's the relationship in our 1 wave. That's where we're expecting it to go. Why? It's just a statistical play. That's the most likely target, that the wave 3 goes this far. It doesn't quite make the 2618. So, and then we get our retracement. Now, just as you might suspect, when it's trading this technically, let me take this off. Now I'm going to go look for my common relationship between my 2 wave and my 4th wave. What do? We go right a few ticks shy of the 50. Right, algos are going to front run it. They'll very, very rarely will they take it right to the number. So that's why you never want an entry right on the 50. You always want to be a few ticks ahead of it. Now, not coincidence that this pivot here is not overlapped here. That's not coincidence. So we get some sort of a 1-2, and this structure holds it. Here's our 50. We go right to the 23. In fact, go through by a few ticks. Right to the negative 23. So, it's when you see the market doing this, it's like you've got an unfair advantage. It's following the rule book, like just tick to tick. And now don't be confused by what I'm saying. This is not the majority of the time, but when the market is following. When the market is following your roadmap this precisely, this is when you absolutely have got to take advantage of it, and you can be aggressive. At this point, we've had 1, 2, 3, 4, 5 swings in a row that are just trading off of probabilities, the most likely targets, not some sort of exotic relationship that you can't quantify. These are statistical probability. The most common wave relationships are unfolding right before your eyes. This is when you have to be aggressive in the market because you won't always get this. You won't always get it. But when you do, this is when you can be aggressive because it's been historically so precise. Time after time after time. I mean, almost to the tick, each one of these. That's when you really have got to pay attention. Now, at this point, we can look at this and say, okay, well, what were we expecting? Well, we had a 1 wave, we had a 2 wave, our 3rd wave is here, and we've subdivided into a perfect 5-wave sequence to cap the 3rd wave. Do you see that? Okay, so I'm gonna take this off, all right, just to keep the chart from getting overly complicated. We've completed the 3rd. What are we now looking for? We're looking for our 4th wave, and we're looking for it to subdivide into a 3-wave structure. Okay, now we have a complete 1, 2, 3, 4, 5 structure here. So we want to evaluate the retracement of the entire 5-wave sequence. Okay, now if you've followed me for some time, is there anybody who would like to, at this point, guess where that retracement goes? Right? Have a look. That should be no surprise. We go right between the 618 and the 65 to the tick. And I promise you it is not coincidental that we do not overlap this wave 1. Right? That is not coincidental. That's happening for a reason. This is algo activity. So we can look at that and say, well, if we're looking for the entire retracement of this, what is it we're expecting here? Again, I take you back to the statistical odds. What are we expecting in a wave 4? Well, we know that 15% of the time, the market will retrace between 50 and the 618, right, or our little 65. And another 60%, that wave will between 30 and 50. So again, 75% of the time, we're going to be retracing in that zone. And we know this is incredibly common. I don't know how many hundreds of examples I've shown you if you've followed me for the last few months. Hundreds of examples of that happening. And the reason you want the 6.5 there is because people that don't know this are putting their stops just on the other side of the 618 on the assumption that it's going to go to the 618 to the tick and then move. And it will do that at times. But what's happening there is stops are getting run. Stops are getting wicked out. So the people that put the stop too close to the 618 are getting hit. And so they were trying to be long. They get stopped out there, and look at the reaction. It's almost, nothing's 100% of the time, but it's incredibly common that when you see this happen, right, and the market starts to move away from it and move aggressively, you know your pivot is in, because that's exactly what you'd expect. Now, all the breakout traders that tried to sell it there, their stops are getting hit. Those are buy stops. The people that know this is an area to be a buyer, there's fresh buys there. That's what fuels this. That's what fuels the relationship here. That's what drives us into the 5th wave. So we take a look at those targets, right? So since we've got that, we know we've got a first algo target here for those that were buyers down here. Our first target here is the negative 23.6. That's at 486. That would be a new all-time high. And we start to see where some of these relationships come in. Here's the negative 618. Here's the negative 100. Those are extremes for this 5th wave off of our 2, 3, 4 targets up above. You want to at least note those and mark them. So now that we've put in the 4 low, what are we expecting in the 5th? Well, of course, we're expecting, since we've had our nice little ABC correction right into our pocket, we're expecting a 1 wave, because now we're looking for a 5-wave sequence to complete the 5th wave here. So this point here, we have the potential to be getting in the third wave. The 3rd wave, let me put that on, of the 5th wave. Do you follow that? All right, so here's our 3, 4. Now we're going into the 3rd wave of the 5th wave. This is your money-making wave, right? Just like it was here, right? The 3rd wave is your big wave. That's the impulse wave. That's the one you can identify by its strength. That's the moneymaker. Now we have the potential here, but of course that wave is going to subdivide into 5 waves. So what we have potentially setting up now is the one wave of this third wave, right? Remember, it's waves within waves. So this third wave has to subdivide into a 5-wave sequence to complete this structure. So let me break it down here, and we'll go to a smaller time frame so you can start to see this and how it relates to where we are right now. So we can get a nice 5-wave structure here to complete the wave 1 high, and it's been an ugly, long, slow retracement here for this second wave. We've just been kind of waiting, and this is when you just check it daily, any activity, nothing yet, and we get sort of an ugly. It doesn't really matter how you label it. It's definitely, we get an A, B. It could be complex, could be a triangle, could be a CD. It doesn't really matter to us as much as to how we label it. What I can see is I've got a swing low here, and I'm starting to get impulsive behavior over here. So as you would expect, let's evaluate the fib relationship. Let me get this off since we have those targets marked. I'm going to take the wave off of this just to declutter the chart. Okay, so you can see the nice channel that we have here on this. So all I'm going to do, I'm going to go from from this swing low, swing high. We go this time a few ticks shy of the 618. Perfect. Perfect wave 2. Perfect in our statistical probabilities. Perfect for that wave 2. We know that the vast majority 73% of wave 2s between the 50 and the 618, right? So it's absolutely statistically perfect. So we're right in the pocket there. And now we're starting to move. This is what we're waiting for, is the market to start to move impulsively. So where that target's up above, off of this 618, here's the first target, negative 23.6. Here's the next target, the negative 618. Here's the next target, the negative 100. Right, so we've got some big upside targets here. That's 520. We've got targets that go up to 800 and above. But again, I'm getting ahead of myself. Let me take it to the right edge of the market. So what can we see here? Well, we got to go to a smaller time frame to get a handle on this and see, okay, where can I get in with some reasonable risk tolerance? Okay, so we look now and we go, okay, well, here's our 1. And we can see this little subdivision. It's a leading diagonal, because we get the overlap of the 1 here, so we get a diagonal to imply that this is a 1 wave. So here's our 1 to our 2. Where does it go? Right in the pocket between the 618 and the 65. Okay, that shouldn't surprise you at this point. So exactly what we're looking for in the 2 wave. Now we've gone to the negative 23 and to the 618, and we've blown through that. Actually, now we wicked through it, and we're getting a little resistance here. So likely we've got a third wave underway here. So we want to look at the relationship between the 1 wave and the third wave. So I'm just going to, again, go. It's the same thing over and over again. So I'm just going to go to my low here. It's like my 2 low. Go to my wave 1 high, and I'm going to pull down to my wave 2 low. See if I can get that right there. Now we're 2ing through the 618. This is the 62% of it. So I'm going to take that off to declutter the chart. We know it's a third wave because we've gone 100%. We have to go at least 100% of the first wave to quantify it as a third wave. So we've gone beyond that. Where's our target? Where's the most likely destination for a third wave? Between the 1618 and the 175, which is why I have the third wave here. Remember this? Remember the most likely location for a third wave. 45% of the time between the 1618 and the 175. Another 30% will go beyond it to the 262. Back to our chart. Where's our likely target for the third wave? Right here. Right here. Now look within this. We've had a 1, 2, 3, 4. Let me label it so you can see this. Remember, it's waves within waves. It's the fractal nature of the market. Okay, absolutely no coincidence. This is not random that does not overlap. So we get more confidence that we're in an impulsive structure here. 1, deep 2, there's our 3, there's our 4. Right? So likely target here to complete the 5th wave of the 3rd wave. I know it can get a little confusing if you haven't seen this before. But when you break it down one wave at a time, the relationships start to solidify and you start marking these. Okay, so at this point, we'd be looking for a 3rd wave high here. So if you're okay, so how does that relate to us trying to trade this market right now? What are we trying to do? Well, we're trying to get the 4 wave, because unless you took this here, unless you took this retracement here, and you knew you were watching this market, right? We hit the 50. So now take note here. Right, these relationships are amazingly consistent. It's just mind-boggling how consistent they are. But when you think that these are just algorithms that are written to do this over and over again, it should start to make sense to you. So here's our wave 2 low, wave 3 high. We come to the 50. We stay. We hold the wave 1. Right, we go between the 50 and the 618. The high probability for a wave 4. Where's our first wave target? Algo target is the negative 23, which lines up right within $2 of the 1618. So high probability target. So how does that help us? Well, if we're going to go up to this target here, which is our high probability target, then we really have a roadmap for where the market's going. So what's the next trade? The next trade, if we get it, right? Nothing says we're going to get it until we see it. If we go right here. Well, now we're waiting. I'm going to take some of this off just to declutter the chart. I'll take the 23 off. What's the highest probability zone? Yeah, let me take some of this off to declutter. Okay, so highest probability zone would be between 3.8 and the 50. Hang on a second. Got too many on there. So if this is our 3rd, here's our entry. Right, there's the 4th. And we want to see that come down in some sort of a 3-wave structure. We want to see an A, B, C. Let me put the wave on so it makes sense to you. Okay, so this is what we're looking for. The counter trend, we trend in 5s, we correct in 3s. So this is what we're looking for. So this is what sits on my chart as I look at this, as I look at Dash, going, do I have a possible roadmap here? Because so far it's been absolutely textbook trading. So again, if you didn't catch this and you're looking for a way to get long, well, you can't trade it here. You can't take it there, right? You're too far. Where's your stop? Your stop's got to be way down here. Too much risk. So if you're not in this, you've missed that part. You've missed that trade. Well, that's okay. That's okay because it repeats over and over again. So we know we've got a target up here. If we get up here and we get the reaction that we're anticipating based on probabilities, then we're looking for the ABC correction to bring it down to the 4. Why do I put the box between the 382 and the 50? Because the most common wave 4 relationships, 60% of wave 4s will be between the 30 and the 50. Okay, back here, that's what you're waiting for. Again, it's just a potential roadmap, but based on the historical precedent that I just took you through, I'll put it to you this way. I'm very comfortable taking that trade. I'm very comfortable. Now, if you take that trade, assume we get it, just for the sake of dialogue and the example. Where's your stop? Well, we certainly could be below the 6.5. We wouldn't want to see it break the wave 1. That would be unusual. But we're at just about a 3-to-1 on the first target. But keep in mind, right? We've got huge targets way up above. I can't even get to those targets on the 1 hourly. I got to go to the 4 hour. Let's go to the 4 hour. So you start to see some of these targets that are way. I can't even. I got to go to the 8 hour for you to see what the potential is here. That's the first one. And that's the 3. Right? So, you have to put it in context. Look how tiny this looks relative to where we could be going off of this 1-2. How did I get that box? Remember, it's just the probability play. If this is my 1 and this is my 2, this is my 786 pardon me, my 1618 to 75. That's the highest probability target for the wave 3. Now look at where we are here. Look at that relationship. So you can say, oh, that's only 3 to 1. Well, your risk there. So I guess my point is you can enter the market here if we see this and not feel like you've missed anything. If you're down on the 1 hour, you think, oh shit, I missed something here. I missed this last little retracement. No, you didn't miss anything. You didn't miss anything. You got to put that in the larger context. So if we get this, is that a trade to take? Absolutely. Do you want to exit right here, fully your position? Well, that's an option, right? Nothing wrong with hitting singles. But what you might consider is, well, I know this market has traded incredibly technically. And if this is going to continue, and we don't know that it will, but if it does, I've got targets up here that are $500 higher. 800 and above. So maybe one option would be to take a partial profit here and let some of your position run, right? So now you've banked some profit. You've still got runners, if you will. You've still got part of your position to run with huge upside targets. Now, you know that it's not going to go straight, right? There's going to be retracements along the way. So there's opportunity for you to add with house money, add with the profit that you've got. Right, with a stop maybe at break even. So if this sets up, and we don't know that it will, but if it did, you've got an entry here, a stop under the 6.5. If this starts to unfold impulsively, and we complete the one wave of the third wave. Right? You remember, you got to put it in context of where your targets are, your long-term targets. You've got lots of opportunities to add along the way. That's why we're all trading crypto. That's the opportunity here. Right? So low risk. So you say that, oh, but Sam, that's only 3 to 1. Well, that's just your first target. That's just your first target. If I put this in the context of what the potential is there in terms of that risk to an $800 reward, let me just I'm curious. I don't even know if I can get it there. If I can get it that far. Just for fun. I got to blow it up to see the numbers. That's 25 to 1. 25 to 1. Does that sound good? All right. There. That's 32 minutes just on Dash. I guess I'm too long-winded for these. I was trying to get Monero and Ripple. Well, it's a Saturday. I'll see if I can get those done as well. But hopefully you learned something there. Hopefully you see the potential of Dash. I'm not trying to pump Dash. I'm just trying to show you the technical relationships here, so you learn by going through the history, and then you see what our potential is should we follow this roadmap, right? It's always just a potential roadmap, but that's an awfully sexy one. All right, guys, I'll wrap it there. Back later if I can get it done. I'll try to do Monero and Ripple for you. All right, see ya.